Hello and welcome everyone. Thank you for joining us for day 2 of the 2020 Refinitiv Wealth Connect Summit. My name is Cameron Ruth and I will be your host for today's presentation.
And for those that don't know me, and I know many of you, I'm Tim Rutka. I'm the head of the BETA Platform Solutions, which is Refinitiv's securities processing, custody, and clearing platform. I've been with Refinitiv in various forms going back to Thompson Financial back to '98. I've been involved in some of the largest back office conversions in history, working with many of your firms, going through the various iterations of what is now Wells Fargo. So happy to be here and talk about where we're at, what we do, and where the future brings us. So where I'm going to focus as I go through this, I'm going to try and squeeze about a full day's worth of information into 30 to 40 minutes. But what I want to do is start out and introduce people to BETA that may not be familiar. And I'm going to talk through some of the themes and areas of focus that we're hearing from our customers and prospects within the industry, and then ultimately describe at a high level how our capabilities and investments help to solve for some of those things that people are looking for. So just a little bit about BETA. Platform's been around for about 35 years. We have people that have 35 to 40 years of experience still with us. From a scale perspective, we hold about over 50 million retail accounts on the platform. So things like data security are extremely important to us. Trillions in assets. When I get to our customer base, you'll see some of the big names. On a daily basis, we're processing about 35 million financial transactions per day. And by financial transaction, I include things like corporate actions, so dividends, cash movements, trades, obviously. And then what we're known for is being very highly available and secure and performant. And I'll get deeper into that. That's at the pillar of what we do each and every day. And we bring together a professional service mindset as we go out and help customers achieve what their ultimate goals are. A little more about our people. Industry experience average is 20 to 25 years. We have broad expertise across every domain when it comes to back office securities processing, technical know-how. So things like working through the market open, especially with the volatility that we've had, is something that's ingrained in our DNA. Deep knowledge of the entire industry. We have about 350 third-party or vendor integrations in the platform. So we're very well connected across the industry and deep within different domains. We're service-focused, right? The customers are number one. Everything we do is about delivering for the customer. And then custody and clearing know-how. I'm not going to spend a lot of time here because that's going to be pretty much the theme of what I present. If you look at our client base, to Joe's opening remarks, we have always been known for the premier retail platform out there, right? So the number one and number two independent brokerage firms by revenue, which are Ameriprise and LPL Financial. Number three, Wirehouse, which is Wells Fargo Advisor. Number one mutual fund company in the world, being Vanguard. But what people don't often understand is that we support over 400 broker dealers on the platform. All right, we have 4 clearing firms and support everything from full retail all the way through the life cycle of an advisor. When we think about investment in the platform, it really starts in the bottom left-hand corner, right? Our customers look to us to invest and run a platform in 3 different ways. So foundationally, the very most important thing is that the platform runs. Books and records are timely and accurate, highly available every day, scale for any volatility, and we always meet or exceed SLAs. We continuously add investment to this area, right? It's table stakes the way that we look at it. And, just to give you some of the experience of our customers as we went through COVID. Going back to 2008, 2009, when at the time Wachovia Securities bought AG Edwards, we brought our 2 very largest customers, which were some of the largest broker dealers in the industry at that time together. That combination at the time was the single largest conversion to date. And we had a formal program that was all based on scalability that we continue to run today. And the way that works is every single year as we go into our BCP DR testing, we take 1 full week and we run and push our application, our processing, at 3 to 5 times what the previous all-time peak was. And the reason we do that is our processing model is, think about it as kind of cloud-based. We can add elastic capacity on demand. So what we don't want to do is have the ability to turn on a significant amount of capacity to handle volatility and have an application issue. So by pushing our applications, to those levels, we're very confident that when we have something like a COVID-19 or, more recently, the announcement of our new president and a vaccine hitting on the same morning, November 9th, that was our single largest day. We provided business as usual like experience for our customers, even though some very big names in the industry were having issues, just given the volatility and stress on the systems. So that's something that we continue to be very proud on and continue to invest in. If you go up a level, the next area of focus is protecting our customers, right? Having a very heavy retail-based customer set, regulatory compliance is, top of mind. And one of the things that's a little unique to the beta offering is that we do all regulatory work on our dime, right? We believe that to be in this business, the platform must be regulatory compliant. I know that others out there may charge or make it mutual across all customers, but when it comes to the beta platform, it's important to understand that's one of our differentiators that we call out, is that we are really focused on regulatory and ensure that the platform is compliant at all time. That also holds true for industry compliance. So things like T2 shortened settlement, which was a big industry change. That was something, again, that was done on at the expense of Beta and Refinitiv. So we get a number of those. DTCC is always changing. Those are costs that we bear and don't pass that on to our customers. And I talked about, the 50 million customer accounts. So very important to us is cybersecurity. We currently have at all times 3 real-time copies of our customers' data, 2 that are synchronous, meaning that they are exactly identical at all times, 1 that is asynchronously replicated, that's 1,000 miles away, which never gets behind a few minutes. And then we have a 4th one that we've added this year in the event that something could corrupt data. So every 15 minutes, we flash copy the environment, and we hold that off in a cold storage. So if we had to recover from, some nation state attack, we would have that ability. So some of the examples that we've done in the last year and are still focused on, obviously consolidated audit trail. So we are reporting for nearly all of our customers. Phase 2A and 2B has gone extremely well, and we continue to work on that effort, which will be one of our top priorities in 2021 going forward. Another interesting one that has popped up is the whole concept of negative interest rates. So we got our customers together, and they came up with a solution in the event that would happen. So we are looking at this in phases. We have already implemented phase 1 and are talking about a phase 2. These are investments, again, made by Refinitiv-BETA. I talked about cybersecurity, and just to build the trust and confidence with our customers, as you would expect, we are continuously running through SOC audits, cyber attestations, you name it, all of those processes and procedures are in play. And once you get the run and protect right, and the customers can focus on really driving the business, that's when they look at how are we focused on growth and innovation. So how do we introduce new business capabilities? How do we introduce new technology capabilities? And things like artificial intelligence, cloud, blockchain, RPA are all areas that we continue to focus on. If we go back to 2015, we started to make a significant investment in opening up the beta platform. Some of the feedback has always been, it's like a black box. It's hard to get data in and out of. And in hearing that, seeing the explosion of fintechs, needing to get to new modern day integrations so that people can drive real-time workflows, drove our investments. So we now have the capability using commercial technology to deliver request response, RESTful-based web services, to replicate data in real time to any environment. We still have the traditional batch and file bulk loads, but any way that a customer needs to either get information into the platform or out of the platform, we currently support. And we have the mindset of API first, right? Meaning that, yes, as you heard yesterday, we have, workspace on the front end for advisors along with Thompson One. We have our client portal solutions. So we can tie all of that together, utilizing all of our new technology capabilities. But we also expose those at the lowest level. So any of our customers that want to own an experience, create an experience, integrate with a third party to drive an experience, all of that is opened up, and that's across the board from client information all the way through back office operations. So modern real-time data delivery has been that focus. I'm going to talk about our current big innovation effort called Operations Workbench in a little bit, but at a high level, that has introduced Amazon Web Service Cloud. So we're now running in a hybrid cloud environment. We have transaction processing still on the IBM mainframe, latest and greatest models, but have introduced cloud because we think that there are a number of workflows that make more sense to modernize in the newer technologies. A really big focus for us has been in the institutional multi-currency space, right? We are traditionally known for being a retail company. But what few people realize is that for a number of our customers, we process institutional as well. So firms like R.W. Baird, Stifel Nicholas, BB&T Securities are all examples where we have done institutional work. And we've had multi-currency capabilities going, back many years in the core platform. But our multi-currency was really more of a swivel chair. Our customers would get the trade, they would input the trade into the platform, and then the processing would happen. So our largest, and what I'm most excited about investment that we've made over the last 18 months is partnering with Nomura Research Institute, or NRI, to build out an end-to-end straight-through multi-currency capability, which allows our customers to trade in any currency and settle at any global custodian or depository based on a single stock record. So full straight-through processing. We have Axos, our first customer to go live about a year ago. And within the last month, we brought R.W. Baird on. So the customers are very excited about this capability. And now that we have two customers, especially R.W. Baird, who's pretty sophisticated in that space on the platform, we're seeing a pipeline of many others, as well as getting lots of interest both domestically in the U.S., and we even have some engagements talking about how our combined capabilities allow us to pursue truly global banks and deliver an operational experience around the globe. And then some other things that I'll dive into are things like fractional share trading. Big interest by our customers. So I'm hoping that, as you saw the foundational elements, one of the things that we like to promote in working with our customers and working with consultant partners is that when it comes to delivering on these big complex initiatives or driving innovation, we have a track record for being successful, and that's something that we bring to the table. So I hope that you can take away a level of confidence, as we work with mutual customers, if engagements happen, that our goal is always customer first and the success. So with that, I want to focus on what we see as some of the macro trends that are driving back office capabilities. So currently, one of the big things that's been in focus for probably a little over a year now is our customers being able to attract and retain advisors throughout their career. So whether they're, a 1099 employee, they want to be independent, they want to move into the RIA channel. How do we allow our customers to maintain those advisors and move forward in their careers? And I have an example of how the platform is designed that'll help walk through that, but also growth through M&A. If you look at the customer base for Beta, you can just pull out a few names. Stifel Nicholas is pretty much the poster child, who has grown through growth through acquisition. LPL Financial also, big in that space, and with some major announcements very recently to bring on M&T Bank and BMO. So the core platform allows and actually promotes the ability for our customers to look outside of just the organic growth. Support the growing sophistication of advisors, clients and broker-dealers, right? Running retail, institutional, capital markets, and multi-currency. I believe the BETA platform is the only platform that from a single integrated platform supports all of those markets. And what we've been able to provide our customers is simplified operations. So they're able to lower their cost of operations by not having an institutional operations group, a retail group. The way the platform is set up is there's a clearing and custody entity that allows for all of this to happen. And I'll demonstrate that also in an upcoming slide. Obviously, low interest rates are shrinking top-line revenue. So what we used to see from a self-clearing driver, we're now seeing the cost pressures. A lot of big old legacy systems are out there. They're under the pressure with all this volatility we've been having. So people are now being forced to put investment into those platforms. And what we can offer is a platform that already has all of the foundational things in place that can allow our customers to drive their strategy forward and focus on their end customers being the advisor or the client. Just like everyone else, robo, zero commissions, direct indexing, fractional share trading is driving increased retail trade activity. We see it with the likes of the Robinhoods of the world. But where our customers are really looking for us to evolve is BETA has a built-in OMS. We have active conversations about allowing our customers to do that directly on the platform. We support fractional trading already. And if there's a third-party OMS, the integration is quite simple. But the whole idea here is allowing them to continue to try and bring that millennial group in, right? This whole concept of dollar trading where I can buy Apple, in slices of $5. Is something that they believe they need to have the capability in order to drive the growth in that segment. Regulatory and industry change pressure continues. I mentioned CAT. A CAT short settlement was another one. And now with the new president being on the Democratic side, history shows that we typically see more regulation introduced during a term of Democratic president. So we're gearing up to make sure that we have the right investments in place in order to meet those needs. We see fintech providers rapidly introducing focused innovation. This goes back to technology and really changed some of our mindset. So if I were to look back 10 years ago and think about how we approach the market, we wanted to try and build and own many different things in the space. But as fintech started to pop up and focused on niche segments of the market, we realized there was no way that we could invest in, try and develop and maintain different parts of a wealth management workflow. So that helped drive us towards the whole concept of open integration and technology investment. Of course, being Refinitiv, there are areas that we absolutely believe we should play in, being the advisor workstation, being the client portal and the back office. Those are all assets that we have. But when it comes to other parts of it, like financial planning, as an example, having the ability to offer our customers choice and integrate with whoever their provider would be, CRM being another example, is really how we think about that whole wealth ecosystem and how we can bring solutions together based on what client needs are. Also driving our investments, aging operations workforce. There's a lot of people that, for 30, 40 years have known how this industry works. It used to be very manual. So our investments are really targeted at how do we automate to take the knowledge out of the people's minds and instill that knowledge so that it's intuitive in the technology investments that we make going forward. So as millennials come in, it's a matter of a wizard-like workflow to solve for an exception versus really truly needing to understand the underlying way that this has always worked. And that drives the need for automation and digitization to power all end-to-end workflows. And then also, a big push, especially from our correspondent customers, for self-service capabilities for advisors, branch offices, and clients to take that that home office burden away. And again, lower cost of operations. So most of this I know isn't, rocket science for this group, but I just wanted to give, a little bit of our thought process and how we think about it. Some of the macro trends that we're seeing, obviously broker-dealer consolidation creating significant scale players. Examples are Schwantage, Morgan Stanley, and E-Trade. We're seeing the new fintech entrants, right? The Betterments, the Robinhoods, the Stash, that have used technology to make trading very simple. But where we see, issues with that time to market is in the foundational capabilities I talked about. Running the platform, protecting the platform. Just given this volatility, I read an article where Robinhood has been out 47 times since March. So their customers weren't able to trade, right? Those are things that are usually in fintech, not the things that drive investment. It's getting the whiz bang stuff out. But when you're talking about big market days and ensuring your customers have the ability to run their business, that's why we continue to focus on running and protecting first and foremost. Also really interesting, and I'm going to talk through an example we have going on, is we're seeing hybrid models forming. So we have an example of a new customer we're bringing on. It's public knowledge, being AssetMark. And they have a really unique model where they're not a broker-dealer. So their value proposition is actually to own the advisor and the advisor's customers. So owning the custody of the end client is where they see the sweet spot so that they can deliver white glove value to the advisor, take all that burden off so the advisor can focus on what they need to do. However, they're doing their custody and clearing in an omnibus model. So the benefit there is they get the traditional benefits of being a self-clearing broker-dealer, but they have none of the regulatory burden. So that's one example. We look at, we're having conversations with new fintechs that are coming up and looking to own the custody and clearing part. So owning the end customer is important because if you have that data, you can then create derivative products based on the data you're accumulating. This whole concept of data is the new oil. So across the board, we're seeing extremely interesting conversations by players that you wouldn't typically imagine having the conversations. And it's all about driving the ownership of really important and valuable data and owning that customer experience. And then self-clearing, right? The way we look at it, our platform has been traditionally retail self-clearing firms. So we're making technology advancements and looking at BPO, which we do have an offering, with the idea of lowering the barriers of entry for a fully disclosed firm to move into self-clearing, where, in the past, that barrier has been the cost of building out an operations, the cost of regulatory, going from a end-to-end workflow that a clearing firm provides to now having to create your own. So through partnerships, through integrations, what we are doing is looking to shrink that gap so that we can offer fully disclosed firms that have grown to a size where they want to own their own brand, they want to own their own client experience, an easy transition to move into that self-clearing world and not have the gaps that we've traditionally seen in the past. And then on the custody and clearing trends, I just talked about the FTC, but the correspondents, they continue to want to differentiate on price and service. Cost optimization is driving them. There's always a push to get lower and lower pricing to do trade processing. So we continue to invest in making sure that our technology and our ability to lower those costs of operations is front and center. And that's primarily how we drive our innovation investments. So with that, I wanted to spend a minute and describe the beta platform itself and how it's set up that allows us to solution the owning of an advisor through their career or bringing on additional business through either M&A activity or anything like that. So if you look at the very bottom and it says clearing entity subfirm 1, that is how BETA is set up. So that is the clearing entity that supports all of the different business lines. It's completely integrated. So our customers set up a clearing entity. We call them subfirm 1. And based on the data model, we have the concept of a firm, which would be a major customer. So Wells Fargo would be a firm. Subfirm 1 is Wells Fargo Clearing. And then we have branch, rep, and account level that we can distinguish different parts of business. So if you look in, I would call it Aqua Box, an example of a correspondent customer. So they set up a clearing entity subfirm 1, and then they bring on Joe's broker dealer. That becomes subfirm 2. And then they bring on Tim's broker dealer. That becomes subfirm 3. So I'll use Wells Fargo, who's got first clearing, who's got many correspondents. They are set up in that model where they're able to run all of that business, but yet only have one clearing entity supporting it. Then you look at the advisor channels. So many of our customers have what I described earlier. They have all of the different advisor models, whether it's an independent channel, whether it's an RIA channel. A lot of them support self-directed business, so let customers go out and trade on their behalf. And they set these up in ways that it can either be from a legal perspective or it can be from a reporting perspective. The platform doesn't care, but allows for independence of each one of those sub-firms from the clearing firm. And also what's important to realize is that the business rules and all of the reporting happen at each one of the correspondent or sub-firm levels. And they can be rolled up or down depending on what type of reporting you want. So the clearing entity has the ability to see everything, roll everything up. But if I had Tim's broker-dealer would only be able to see and do things for Tim's broker-dealer. So very unique setup that allows us to process all of that type of business from a single platform. If we talk about the core capabilities, right? BETA is an end-to-end platform, all the way from placing orders through all of the reporting that happens after settlement and on and on and on. So it's flexible, it's multi-entity, as I just described. It supports complex business models for inorganic growth, and it has a robust data model and a configurable rules engine. So I talked about us having more than 400 broker-dealers on the platform, giving our ability to configure through business rules. No two of those 400 broker-dealers process on the same way, but yet we're able to scale and run all of that business from a single source code base. It supports retail, institutional, capital markets, multi-currency with our integration with NRI. We're regulatory and industry compliant. And what also has set us apart and has been a value add is this concept of straight-through exception-based processing. So BETA was originally designed from the start as a retail platform. And what I mean by straight-through exception-based is that if a customer places an order, the execution comes back from the exchange, we take that execution and we apply the fees to create a trade record. We drive the trade record into customer ledgers, we drive it into the settlement side of the business, and then we service the assets, so corporate actions, cost basis, and the like. If there are no exceptions that happen, nobody ever touches any of that. It just happens. And the benefit of having this model is that we're self-reconciling. So if something does occur throughout the integrated process, we will throw it out as an exception, and that's how our customers work on the platform. It's not, they don't have a big need to do reconciliations with multiple systems that are put together to try and deliver the same solution that we deliver. So it's been a big benefit, and we hear a lot of great feedback from our customers. So I just wanted to emphasize that with you. And then I mentioned earlier, but we're completely API enabled. We have over 300 industry, utility, and third-party integrations. So anything that a customer would need to do, we have that capability. And with that, conversely, what I think the mindset has grown to be is that, yes, it's integrated and that's great, but what a lot of people are looking for is flexibility, right? So we put a lot of thought as we build out our technology capabilities into how we're able to actually tailor a solution to a customer's needs. So by API enabling the different parts of the system, we have this concept of we can do it all, but if you have something from a third party that you would prefer to do, we can tailor the solution. So in the example here, what I'm depicting is AssetMark, our new customer, right? They have the custody side of the business on the BETA platform. They don't use us to do any trading, any settlement. That's with their omnibus clearer. But yet we're able to devise and create a system that allows them to get what they need. You know, other examples that are popping up, we handle stock lending. People may not like the way that BETA does stock lending because there's another third-party product out there. So we'll integrate, you know, whether it's an FIS or a Broadridge or, you know, some other third party, we have integrations across the entire spectrum. So think about it as, yes, it's an integrated platform. It can provide end-to-end capabilities. And, you know, if that's what a broker-dealer wants, great. But if not, it can be tailored and modified to fit the needs of what that customer requirements are. I just wanted to touch a little bit on regulatory, right? This is a big differentiator for us. So we actually have a role, a chief regulatory officer that oversees the BETA business. Many of you may know him. He's Will Leahy, formerly of SIFMA. So he actually runs a group that has membership from all of our clients, and on a weekly basis, you know, they go through the proposed rules, the approved rules, the regulatory issues, reputational risk. He keeps them updated on the progress of our development. He's industry known and participates in many of the CAT forums, and he helps our customers, you know, write papers back to the regulators, to, you know, in areas that can help benefit them. So if the regulators are looking for something that would cause undue burden, Will helps participate and brings his expertise to augment that of our customers in order to work through that regulatory landscape. Just an example of, you know, some of the areas we've been focused on. You can see the picture in the upper right-hand corner, consolidated audit trail, which will continue on for years, and then some of the other regulatory things that we've been focused on. And then I wanted to talk a little bit about how we advance our platform. So we have this concept of a BETA user committee. So just like there are industry groups like SIFMA, across our customer group, we have this committee structure, and we have committees that are based on the things that are most important to our customers. So we'll have a committee on cost basis. We'll have a committee on mutual funds. We'll have a committee on managed account processing. Right now, we spun up two new committees, one for negative interest rates, as well as one for fractional trading. So the whole concept here is that our customers drive the value of the platform. And then over the top of that, we have what we call the Executive BETA User Committee, which meets on a monthly basis. And this is our top 7 customers having representation, and they help drive that, how I started out, the run, protect, and innovation agenda for our investments going forward. So a little unique, but, you know, really praised by the customers in that although they're all in the same business, the group gets together and is able to have really great dialogue on helping each other solve, you know, situations, especially in the back office. Because when it comes to back office, it's mostly commoditized. So it's really more about talking about efficiency and, you know, discussions around things like robotic process automation and how are you implementing it. So great dialogue is driven, so some more value that we're able to bring to customers. We have a proven and trusted execution support model, and this is really around conversions, right? I've heard a conversion to a back office described like a heart transplant. People are making a very big decision, and they have to get very comfortable with who is actually going to execute that effort. And we have a proven track record for doing this. Again, I've been involved with many of the people on this call in these types of efforts. So I want to promote this, that, as you're thinking about your customers and who would be a good partner to achieve success, look at the track record that Refinitiv-BETA has been able to put out there over the years and within the industry that continues. And then an engagement model. So this is something that has grown out of the financial crisis, 2008. Basically, that G-SIFIs, SIFIs, or very large broker-dealer entities or banks, have to be able to demonstrate a level of control with their third-party relationships. So things like Reg SCI, right? The ability to explain to a regulator what that entity is doing, right? Out of all of that, we've created this engagement model. What I'm showing you is the most robust, but the idea here is to build transparency as well as aligned efforts on both sides. So if I start at the bottom, we have this concept of an operating committee. So this is made up by members of each a Refinitiv-BETA member and our customer, and it would consist of, an example would be regulatory, which I talked about. We have a technology operating committee that helps drive how we invest in technology, business and operations, which we call back office, advisor and client solutions, which is front office, and just relationship engagement as examples. So those committees meet on a monthly basis to talk about the things that are important within that domain. That then rolls up to this concept of a relationship committee in the upper middle, which is the lead from each organization on those two committee or on those various committees. What that drives is this concept of a joint roadmap. So we understand where our customers are going strategically. They understand where we're placing our investments. And what we do is we merge those things together, create a joint roadmap, so we're lockstep when we go into next year's execution, that the plan is already there, the funding commitments there are no surprises, and that allows the transparency for our customers to track and understand what we're doing, as well as for us to understand where we need to have the investment dollars for that planning year. And ultimately, this rolls up to what we call the executive board, and this is very senior people at the organizations. In many of them, it's the chief operating officer, it's the CFO, right? It's the people that ultimately hold the purse strings and the decision making. And that group meets either 2 or 4 times a year, depending on what customer it is. So all in all, the whole idea here is that we have a very robust engagement model. This is the most extreme you would see. We have some customers, given their size, that we take bits and pieces, but the concept is still the same. Right, giving our customers the opportunity to engage with us, to align on a joint roadmap, and have an escalation point if needed. And then the last thing I wanted to talk about is where we're making a major investment in technology. And we're calling it Operations Workbench. And it's really the reinvention of BETA, right? Out in the industry, the feedback is, yep, BETA is a solid platform, but it's been underinvested in. It hasn't really changed in a very long time. And that's what this investment is all about. So if you take a look on the left-hand side, right, the benefits, it scales, it's secure, highly available, regulatory compliant, and it does all of the core books and records type processing. And that has served us extremely well. But where we've made the investment is in the middle, like I said, API enabling everything so that we can create very robust workflows that allow us to automate as much as back office processing as possible through either coding it away, automating it, applying newer technologies. And the whole idea here, our North Star goal, is to get to what I refer to as zero operations. So how can we turn operations into an oversight role versus I'm in there and I'm fixing exceptions each and every day? And the way that we've moved forward is by utilizing the open API-enabled capabilities is now start to actually move some of those things that make sense, not to be in a back office platform, but more of a middle office, or drive, greater efficiencies and workflows for things like new accounts, reconciliation engines, corporate actions, especially in the voluntary side, ACATs. So building very robust workflows that allow ultimately our customers to lower their cost of operations in the back office and allow them to modernize and innovate in the ways that they want to. And I can tell you we've had about a 60-40 mix here. A lot of our customers, because they drive very large enterprises, are taking our APIs and embedding them and creating their own workflows in areas like new accounts or maybe cash movement. But the other 40% is taking what we're developing. So just like in the advisor space, the client portal space, in the beta space, it's all about API first and integrating and providing solutions where it makes sense for our customers. So with that, that's what I have for the presentation. It does look like there are some questions. Let's see here. So is block trade allocations and average pricing now real-time or still overnight batch? We've been real-time with that since around 2004, so completely all real-time. Anything related to trading doesn't even have a batch function. What we do is we take trading and we move the trading into the trade activity into our ledgers as part of a batch, but trading itself is all real time. And then as AssetMark, if AssetMark is a self-clearing BD using beta, why does that mean they don't have a regulatory burden? They are not self-clearing. They're not a broker dealer. They are utilizing the platform to do custody and clearing, but all of the broker dealer type functions, they're outsourcing through an omnibus clearer that does all of the trading, all of the settlement, and are paying them in a fully disclosed omnibus clearing model. But that omnibus clearer knows nothing about their customers. So they're maintaining things like the bank relationship, banking relationship, so net interest income and all the like. They have the ability to do things that will drive revenue that traditional self-clearing broker-dealers have the ability, but yet in this case, they're not even a broker-dealer. So a real unique situation. Well, let's see. Can you describe some of the gaps you're closing for fully disclosed self-clearing firms? So there are a few examples. So one of the areas that we put a lot of focus in is new account opening and updating. We didn't have a solution. We would give our customers the tools to do that. But when you're with a clearing firm, that's part of the package. So in one example, we have a partnership that was announced over a year ago with Appway. So we're currently utilizing Appway as our new account opening and onboarding solution, which closes a major gap. We have other partnerships and integrations that are in the works. I can't talk about some of them, but basically to bring time to market, the big focus has been on the areas that have been traditionally gaps for us, like financial planning, performance reporting, and some other areas. We made the acquisition of Schvantage earlier this year. We made the acquisition of ASI earlier this year, which closes some of those gaps. But also it's partnering with best-of-breed third parties. You've mentioned wizard-like automation. Does Refinitiv employ RPA methods in the area of automating what is in the people's minds? So the way that we are approaching RPA is we currently support it. A number of our customers are already using our APIs to do RPA. Our initial focus is on, first, let's streamline and create the wizard-like capability, right? So what is the right workflow to put in place? And at that point, we will be applying as a second phase RPA, artificial intelligence, machine learning, right? So if I have a workflow and I'm in the cloud, I can use cloud capabilities like machine learning to put it in front of what that workflow is. So it can learn how people are solving the exception, and ultimately that allows us through artificial intelligence, RPA, and other technologies to fully automate that. So it's a building block process. We're iterating through the back office, getting the workflows right. And as a second phase, it will be applying those newer technologies in the way I described. All right, I think I've answered most of the questions. I got one last one. All I heard was partnership with Appway. Appway is our new account opening and onboarding partner. So that's the gap that we're filling there. They're known in the industry. They actually work with some of our customers. So we're excited about that, and we have an active engagement with them to build out workflows for a few of our customers happening right now. So with that, I'm going to turn it over to Cameron.
Thanks, Tim. Before I start, one quick housekeeping note that I skipped over. On the attendee console, you'll see a survey. If you'd like any information on any of our solutions, please feel free to fill that out. So I'm going to talk about the Refinitiv Maxit tax solutions. I will acknowledge out of the gate that for a lot of you, the word tax either scares you or bores you. I assure you it doesn't for us. We're very excited and very committed to tax, and we actually think it's extremely interesting, and you'll hear this throughout my presentation, actually strategic. So it's kind of a missed opportunity for a lot of firms, and we help firms address that or turn it into a strategic advantage. Joe mentioned the acquisition of Schvantage back in March of this year. Schvantage had two primary business lines, the tax solutions, which I head up, and then also some wealth products. There were different reasons for the acquisition along both business lines, but within the tax space, this slide kind of talks about what we're bringing to the table. The purple boxes represent what we do in the Maxit tax solutions. So we have cost basis reporting, information reporting, tax optimization. We have a digital experience. There's a widget library. There's a lot in there, and that is all was all unique to Refinitiv. So it really builds out the tax products at Refinitiv. Together, we take the Maxit tax products, which are highly automated. We also have some managed services, which I'll mention briefly a bit further on. Marrying that with Refinitiv, which of course is a global provider with a lot of intelligent, flexible solutions and deep experience in securities processing. You just heard from Tim talk about that a bit. Together, this sets us up nicely for global tax solutions. Being a valued partner, obviously Refinitiv gives us a scale that we didn't have as an independent company. So together we have the resources and the scale to support the largest clients. We'll look at some of our clients that we already have that are very large in scale, but with Refinitiv we expect that we'll add even more large clients. We do have a diverse client base. Maxit is both cost basis reporting and tax is platform agnostic, so that's something important to keep in mind. We have integrations with all the major back offices, all the minor back offices, and a lot of prop shops. That strategy will continue forward as part of Refinitiv. Even though we are deeply integrated with BETA, we'll continue to be platform agnostic and work with all back offices. I thought I'd bring in some quotes from people other than me to sort of highlight that I'm really not the only one thinking about tax, or the team at Refinitiv isn't the only ones thinking of tax as more strategic. Really getting beyond compliance. Obviously, compliance is job number one, right? But I have a few quotes here that kind of demonstrate how others are also thinking about the evolving tax market. KPMG said there's no shortage of challenges or opportunities facing today's tax functions. That's absolutely true. Carrying on as in the past is not a viable solution. Deloitte took it a step further and said that tax function is no longer all about compliance. Again, compliance is the most important aspect, but they're looking beyond it as well. While many tax functions regularly implement new technologies, they're generally responding to a specific regulatory reporting change and put in place suboptimal solutions rather than innovative programs. We emphasize innovation. I have a timeline that will show you some of our innovative features over time. We're very proud of them. We're continuing to invest in the technology. So, of course, we respond to any regulatory changes, but we put a lot of emphasis on innovation in addition to those sort of mandatory changes. And then from a global standpoint, TNF Group identified 4 global trends impacting operations. And we kind of think of all of these as impacting us in tax: the rise of digital tax reporting, obviously, tax rate and rules changes, an increased need for tax transparency. That's a key feature in our tax reporting that I'll talk about shortly. We took a much different approach to some of the legacy products that are out there. And then growth in business incentives. Now, there are also a number of trends in wealth management, in the broader scope of wealth management. Tim mentioned a few of these. They impact us in tax as well. So we're seeing shifting revenue streams, the elimination or virtual elimination of commissions, fee compression, rise in advice. Firms that traditionally, historically, had not been in advice are more and more looking at ways they can broaden that relationship with a client and offer advice. And then a lot of these changes enable new products. So direct indexing, which is a really interesting concept, is really made possible through the elimination of commissions and fee compression. So now it's possible to trade portions of ETFs rather than the entire ETF. That actually does have a major impact on us, because once you start doing that, you have to track those individual holdings and do the cost basis and tax, not for an ETF as a whole, but for the individual securities. And firms are, this isn't necessarily new, but I think maybe it's accelerated, where firms in the industry are continuously looking for efficiencies. So, reducing operating costs through automation and machine learning, increasingly outsourcing functions in tax operations. We're seeing that more and more, and vendor consolidation. Today, you could have a broker could have 6, 7, 8 different vendors that they use overall for tax reporting. We're able to consolidate that number and take on a lot of those, do a lot of those things ourselves, so that a client can reduce the number of vendors they have to work with. And then more rapid technology adoption. The industry is actually kind of interesting in how slow it adopts technology. There's a lot of talk about technology, there always is, but adoption is slow. That's starting to change, and I think firms are getting more aggressive in adapting, implementing new technologies. So everything's digital. It's almost to the point where we really shouldn't even be talking about digital, because if you're not digital, you're probably about 10 years behind. We saw the rise of robo-advisors. Again, that's actually not really new technology, but the way that it was delivered directly to consumers is. Blockchain and cryptocurrency, they're really 2 different things. There's some pretty interesting things you can do with blockchain in the back office. Cryptocurrency as an asset is still evolving. From a tax perspective, is still evolving. We're expecting to see some guidance next year from the IRS on that. And then interoperability. I mentioned some of the partners we have that may seem unique. We partner very well with other firms to help our clients have better streamlines, better reduce costs, greater efficiency. We play well with others because the clients, it's really everything we deliver is around the client. So I want to talk just for a minute about our methodology in developing tax products. Clearly, compliance, that's, I said, job number 1. That is the foundation of everything we build. We have proven rules-based solutions, our cost basis and our tax reporting products. We are trusted by over 100 registered firms that rely on us for cost basis reporting. And we're vigilant in our approach to compliance. So we do a lot of work notifying clients of evolving tax law well in advance of when it might go into effect, or even be formally approved. We see that as part of our responsibility with our clients. Now, once we have a compliant foundation for a product, usability is the next thing that we focus on. We really want to develop products that clients can use easily and efficiently, and enhance the workflow. So, for instance, we have the ability to generate tax forms directly in the UI at any point in the year. We use a lot of automation to minimize reconciliation. We're looking at RPA to even further reduce reconciliation in the future. And we have a lot of dashboards that make it very easy for operations teams to get a quick, at a glance, look at all of the data, all of the reports that are in our cost basis and tax products. Now, in terms of automation, I mentioned we're working on RPA. We actually have a lot of trends we developed internally, trends in the data that we think we can capitalize on. We have some work to do before we commercialize that. It has to be accurate. Again, compliance being a huge consideration here. So, we're going to spend some more time making sure that we can commercialize those trends. We already have review and release technology that we can marry with that to help operations folks, comb through that reconciliation and be confident that the adjustments are correct. And then in terms of the peak of the pyramid is really value add. So firms typically buy our products for compliance reasons, or at least cost basis reporting and tax information reporting. But we're sitting on a wealth of data that can be used in many different ways throughout the year, not just year-end reporting. We take advantage of that and increase the value of our products by providing running tax liability dashboards, for instance, intra-year prospective forms. So you can generate a PDF, a 1099-B on January 2nd, if you'd like, just to review the forms, make sure the data is accurate, get comfortable with with all the forms, not just the B. That was an example with the B. But we can do that right in our browser at any point in the year. And we have a tax optimization suite that leverages cost basis data. Again, with our strategy always being agnostic to the underlying data or the back office, that our tax optimization works on top of anybody's cost basis. If there was a reason to use another product other than Maxit, the tax optimization still works very well. I'm going to talk a little bit more about that product further on. I mentioned innovation is our cornerstone, and we have not stopped innovating, and we won't stop innovating going forward. We launched Maxit cost basis reporting on the eve of CBR going into effect in 2010. We started doing intraday processing in 2012. Maxit, all of our products actually, are real-time natively. So when I'm talking about intraday processing, it's the ability to take messages from the back office, again, whichever back office a client's using, throughout the day. In 2013, Broadridge outsourced cost basis to us. The next year, SunGard FIS Phase 3 did the same. And in 2015, we commercialized RDS. RDS, Replicated Data Store, is a product that sits in the client environment and syncs in real time to the Maxit database. So clients can pull real-time data, calculated cost basis out of that for any downstream application. And they can do that without coming to us. So they can create new reports, they can feed new systems, it could be rebalancing, it could be statements, it could be confirms. All of that data sits in RDS in the client environment and is synchronized with Maxit in real time, with representing any edits to the transaction data in Maxit or any manual edits to that data. In 2016, we had a major initiative to increase performance. So we added account security hyperthreading and improved performance 5 times, which is critical. If you think of some of our larger clients, Vanguard, Robinhood, Raymond James, there's a lot of volume there, and they're all using this data, not just for year-end reporting. So it's critical that we're able to process daily data and get it back to them quickly. In 2018, we launched introduced the Maxit tax information reporting product. We also introduced cryptocurrency, cost basis reporting, and tax. Those products, it was a big year for all 3 products. And then the next year, we introduced the tax optimization tools. We actually had a predecessor to that we developed probably about 6 or 7 years ago. It was very early for the market as a whole. I think the market was still trying to get their heads around the cost basis reporting regs themselves, which had just been introduced. and they weren't really ready. The industry wasn't really ready to think about using that same data pre-trade front office, and that's what we're doing with tax optimization tools. So last year we relaunched the product. We're currently working on integrating that with Refinitiv wealth products. And then this year we introduced interactive tax forms. That's the ability to generate a PDF form on demand in a browser anytime that you want. Those could be provided to clients as prospective forms throughout the year, but they're generally used by tax operations teams to review the data. Okay, so problems we solve, again, compliance. I mean, it's hard to say, you have to start there. Our products are fully compliant, cost-basis reporting and tax. We support over 100 registered firms for cost-basis reporting. We also are very active within the industry. So we chair the FIF cost-basis reporting and tax committees. We have internal counsel, Nelson Suit, who's staying on top of all the evolving regs. And again, we communicate that to clients. We also provide some thought leadership material to the public that's available through our website. We're trying to reduce total cost of ownership for our clients. And so that does not mean that we're the low-cost provider. We're not. The software is not the low-cost provider. What it does mean is that we're reducing all of the other costs that go into tax reporting. So everything starting with the back office integration, our products integrate directly with the back office. Again, any back office a client uses. We're essentially creating a mirror image of the back office. So not just the accuracy of the data, but the timing of the data. So one example might be a corporate action event that was supposed to occur today. We know the event. We've already created an expectation of that event from the back office, and perhaps the back office hasn't processed that yet. We won't process, even though we know about the event, we won't process that in Maxit because then you have reconciliation problems, and we want to remain in sync. And that goes a long way to reducing operational costs for our clients. The products are fully automated. We are getting our toe into RPA. We'll get there eventually. We want to make sure that it's accurate, but that's the burden on ops teams as well. And then for firms that want to really start downsizing operations, we offer managed services. Now, these are managed services for our products. This is not sort of full BPO to do anything that a client wants us to do. They are to support cost-basis reporting and tax operations. But this is very attractive, particularly to newer firms. And I don't even mean it's not a startup even. It could be a new business line for an existing firm where the client does not have a tax operations team. And so they'd rather avoid doing that at all, and they'll outsource a lot of that function to us. That's an increasingly popular offering that we have. And then maximizing value. Again, we're trying to make tax strategic. We think it is strategic. We think it's a critical component of wealth overall. We also think that doing tax well reflects well on the client service and the relationship with the client. So we want our clients to start thinking about tax as strategic as well. We're also aligning strategically with our clients. So our better clients share with us their strategic roadmap, so we can start to think about how cost basis and tax may have to evolve to support those new offerings. That's something we're very, we stress very strongly with our clients, and our better clients have responded. So we're in alignment in terms of our roadmap, in terms of configuring our products to support our clients' evolving products. And then tax management as a whole. It is a large cost for firms, and I'm sorry. This should have said tax optimization. So we're again taking that cost basis data that we end up reporting on at the end of the year. We're utilizing that for pre-trade, or making it possible for our clients to utilize that for pre-trade elections, front office advice, all the things that you can do with tax optimization. Some of that's automated. Some of it is more manual, like tax loss harvesting, for instance. I won't walk you through all of this, but these are the Refinitiv Maxit tax solutions. So we have cost basis reporting. It's a comprehensive platform that has everything that clients need for cost basis reporting. I'll let you read the details when we circulate the deck. I won't walk you through all of that. Same with tax information reporting. It's a comprehensive platform with all the 1099 series, 1042, retirement forms. We do Puerto Rico, we do state reporting, we do IRS fire reporting for our clients. We do TIN matching. It's everything our clients need for tax reporting, we provide for them. Tax optimization, that is our front office product. We have some of the things you would expect to see in there, like tax loss harvesting. We also have some other innovative tools, which I'll talk about in a minute. So what makes us unique? These are sort of the high points in terms of how we compare to other offerings in the marketplace. Again, we are platform agnostic. So as brokerages, as firms move about, maybe switch back offices, maybe have multiple back offices, we continue to support our clients through all of that. Our products are fully automated, minimizing the cost of ownership. In cost basis, our data is stateful. So what that means is that when we provide cost basis data back to our clients, it's fully calculated. It does not change the next day. If they request a report or a query on the same data, that cost basis is once we've calculated it, it never changes. And that's a little bit different. Some of the other products in the industry calculate cost basis every time there's a query. That leads to changes in cost basis, inconsistencies. Not good. And then, I talked about how we synchronize with the back office. Again, any back office, we're in full synchronization, providing a mirror of the activity in the back office. We do support intraday trade processing. Again, Maxit is natively real time, but this is the ability to take intraday trades from a firm and provide cost basis throughout the day on that new activity. Most firms do not process everything real time. For instance, corporate action activity. Though we have some that do. We can do both. We can process just trades and then do RADs, receiving deliverables, as batch in a traditional batch at the end of the day, or we can take all of that data in real time. We offer support for digital currencies, not cryptocurrency, but any type of digital currency, and that includes automated forks and airdrops. We've been actually very active in the last 3 years. So when cost basis reporting was introduced in 2011, there was a rush for firms to put compliance systems in place, and then it got quiet for a few years because at that point everybody, all the firms had solutions, whether internal or through a vendor, and there was a lot of effort because the regs were rolled out in multiple years. A lot of effort, probably about 5 years spent just configuring systems based on evolving regs. So that there was a quiet period, but in the last 2 or 3 years, we're seeing a lot of interest where firms, now that they know what they have, whether it's an internal system or a vendor, maybe don't like the way it operates. It's not efficient, it's too expensive, it's inaccurate. So we've seen a lot of interest. Probably our innovation's probably been a big generator of this, of the renewed interest. And so we've done 20 conversions in the last 3 years. Next year, we'll probably do another 10 to 12. So it's not a boring part of the industry. It's still active. And we think that we differentiate our products enough to convince a firm to go through some of the pains in doing a conversion. It's kind of a mini back office conversion. And our products are highly scalable. So this year, we'll process over 3 billion transactions in Maxit. Jumping over to tax information reporting, again, it's cost basis and back office agnostic, so it'll work on any back office, it'll work on any cost basis data. It has all the standard forms, we also do informational forms, state reporting, Puerto Rico, IRS fire submissions, and TIN matching as well. We do daily processing. Now, this is a little bit different than your traditional tax reporting products that process data. They may do it periodically. They may do it throughout the year, but they really don't have a good look at all of the fully processed data in the tax system until Q3. So you see a lot of firms start to do test runs in September and October. We're essentially doing that throughout the year. So that drives down any data errors. They're discovered early on the year and addressed. So by the time you get to year end and you're preparing for tax reporting in February, the data is already clean. And so there's not this huge surge in operations costs that firms typically see in Q4. Again, we do digital currency reporting. Together with cost basis, Max is the only end-to-end solution in the industry. So we're the only firm that can provide both cost basis and tax reporting on a single platform. There are huge advantages here. It's more efficient. There's also superior data integration. We don't see data. You don't have data going from one vendor to another, or the delays that come from that. So in the case where a firm might have a different cost basis vendor and tax vendor, the tax vendor is reliant on the data coming from the cost basis vendor. So if you have a correction in cost basis, you want to correct a tax form that is incorrect due to the cost basis data, you have to go through that full cycle where the back office is sending data to the cost basis vendor, the vendor then processes that data and then sends it to the tax vendor. We do all of that on a single platform. And this is kind of what I talked about. I'm not going to walk through this schematic, but in a decentralized tax solution, you have all these different players. You have the back office, you have the cost basis vendor, you have the tax vendor. If you're doing print, you also have physical print and mail delivery. In our world, we do the centerpiece is us. Now we're doing essentially we're not taking over the back office, but because we're in sync with the back office, that becomes part of what we support. So the back office data, the cost basis calculations, the cost basis data store, the tax data store, form generation, all of that is provided by us. It's a single vendor, it's a single SLA. If there's a question, the client picks up the phone and calls us. They don't have to think about which of their 4 or 5 vendors to call. So this solution is far more efficient than the traditional decentralized solution. Our products are technology friendly. This is a little bit of a wonky slide, but clients have the ability to either send us the native files out of their books and records, and we can convert those and digest them, or they can they can map that data to our standard files. But either way, depending on the preference of the client, we can consume those forms, that data. And then the lower half of this slide really talks about all the options that exist out of the box. This is not customization. These are all standard outputs that we provide to clients. So we have a standard cost basis extract. We have web services. We have tax reporting formats. We have a native Broadridge file. We have a native Wall Street concept file. Of course, previously I talked about co-opetition. A lot of our clients use other products, primarily because we introduced tax reporting only 2 years ago. But nonetheless, we know that clients will, for varying reasons, at times use other tax vendors. And so we have native cost basis files, native extracts in the native format for those other firms. And of course, BETA. And then we have custom 1099 extracts, which are really used by firms that are still doing tax in-house. We also offer custom extracts, so statements, open and closed tax lots for money managers, and then replicated data store, which is a product that I mentioned earlier, sits in the client environment and syncs in real time. It really removes the need for any of these other extracts, and because the client can take whatever they need right out of RDS anytime they need it. Tax optimization. So this is obviously not a tax reporting product. This is a front office product. This is a product that's designed for advisors and investors to maximize the value of their portfolio. So, what really matters in terms of investing is how much the investor has after they pay their taxes. So, we're working to increase after-tax performance. We provide dashboards that track year-to-date tax liabilities as well as tax optimization opportunities. We offer both passive and active tools. So in terms of active tools for tax loss harvesting, gain and tax deferrals, loss capture. Often there's, actually I shouldn't say loss capture, but that would be locking in a loss before it, as short-term before it goes long-term because the value is higher. We also, as part of the tax optimization, want to look at wash sale avoidance, because if you make a trade for tax purposes and it generates a wash sale, it defeats the whole purpose. And then we have tools and reports for gifting, goal funding. We also have a really cool pre-trade what-if analysis, what-if tax analysis tool that will look at a trade prior to execution and determine if that is the best tax lot to sell. So if I had 10 tax lots of Amazon and I was going to sell a specific one, we'll estimate the tax liability from that trade. We'll also look at the other 9 tax lots to determine whether there would be a more optimal tax lot to sell from a tax perspective. And then we have passive tools. And so these are really lot relief methods that can be used that don't require the advisor or the investor to be constantly looking at their data. These are automated strategies. So, FIFO is the default method for cost basis reporting, but it's not tax efficient. LIFO is the opposite, which, in a rising market would actually be better because you're selling the tax lots with lower cost, but neither is really tax efficient. So we also offer HIFO, min tax, and max tax. Max tax is an interesting one because min tax optimizes every trade for the most tax efficient, highest cost lot. Max tax is the opposite. Now, normally you wouldn't think an investor would want to use max tax, but there are definitely cases where they might. So, in fact, we're kind of sitting in one right now. With the change of the administration, there's a good chance that tax rates will increase next year. There could be changes to capital gains rates. So some investors might actually want to take more gains this year with the lower tax rates than they normally would. They want to actually accelerate those gains. Average cost is only for mutual funds, and we also have constructed custom lot relief methods for clients. Now, no one wants to sit and look at data all day for tax opportunities. So we provide alerts that are configurable based on the interests of the advisor and the investor. So we can alert those investors to opportunities. They don't have to keep coming and looking at our reports. We also personalize the data. So we have the cost-based data, or assuming they're using Maxit. If they're not, we can use another vendor's cost basis. But we go well beyond the cost basis data itself to personalize the calculation. So we're taking into account federal tax brackets, state tax brackets, capital gains rates, loss carryover for each investor, as well as income and filing status. So an individual may be filing as an individual or as head of a household. That can change the tax optimization. There are benefits. Our products benefit, obviously, the investor, but also advisors and the firms themselves. Now, one thing I'll mention is that we don't cross the line of offering advice. These products, the tax optimization product is constructed in a way so that we're not providing advice. We are just doing calculations based on the data, the same data that's being reported to the investor and the IRS at the end of the year. And it's up to the advisor and the investor to determine whether they're actually going to act on it. I mentioned it benefits all the constituents, the investors clearly, increases after-tax performance. It strengthens relationships with their advisors, and conversely, from the advisor perspective, increases offers additional touch points with their clients and helps improve those relationships. There's clearly a rebalancing component here where in the process of rebalancing a portfolio, you should be taking tax into consideration, at least to the extent of selling a portion of a position, several tax lots within a position. You should be selling the ones that have the best tax outcome. And then from the standpoint of the firms themselves, brokerages and RIAs, these products help minimize tax outflows, because if the client is overpaying on taxes, at least from our perspective, if you're not doing tax management, you're probably overpaying taxes, and you're probably paying those taxes with assets that are at these firms. So by offering tax optimization, firms are able to minimize those tax outflows. It also encourages asset gathering. These are unique products with huge value add. Earlier, I talked about commissions essentially going away and fee compression. So the largest cost is taxes. It always has been the largest cost, but now it's really very clear to everyone, or should be, the cost of taxes on investing. I won't go into detail here. These are the managed services I mentioned earlier. Again, they are managed services around our products, so we provide managed services for cost basis reporting and tax reporting. In terms of using our products to further connect with clients, the first line here, the green box there, talks about is really your traditional cost basis or tax reporting product. It's all about compliance. So we're generating forms, providing the forms to the clients. Clearly, there's a client service aspect to that. If you do it well, you probably never hear anything from your client. You do it poorly, you definitely hear, and it does not help your relationship. That's pretty much the extent that traditional firms or legacy products have taken in terms of using tax to connect with the client. We take it further. We provide forms and data in APIs and widgets that can be deployed on websites. It increases client satisfaction, lower support costs. Clients aren't always calling the help desk to get this information, and providing this data throughout the year really helps either in formal planning or informal planning from a self-directed investor. And then in terms of, we have tax optimization APIs and widgets that can be deployed for advisors. And I just talked about the benefits there, but it's not, even though I had a couple screenshots that are from our GUI, we don't really expect anyone to ever use our GUI. We expect them to use our APIs and widgets and integrate the data into their existing web properties. I mentioned this a little in passing earlier on, that we actually take our role in the industry very seriously, not just as a software provider, but in terms of thought leadership. Part of the value we provide to our clients is helping them understand the current regs, but also what might be coming down the pipe. And so we have a tax and analytics blog that's actually available to anyone. You don't have to be a client. We also publish a monthly Tax Insights newsletter. It's written by Nelson Su. He's actually a really good writer in the sense that even if you hate tax, you'd probably find his writing interesting and really clear. So you don't have to have a tax background to make sense of some of the regulatory changes that are coming our way. Nelson does a great job of articulating that for our readers, and that again is available to the public. We host quarterly webinars, informational. And I mentioned we chair the FIF tax and cost basis reporting working groups. What's next in tax for us? So we were acquired in March by Refinitiv. So we are working through integrating a lot of our functionality into other products. We're already actually fully integrated with Beta, but some of the wealth products in particular take advantage of our tax optimization. That's in flight. We're already looking at possible opportunities with LSEG. London Stock Exchange has acquired Refinitiv. That will close next year. That will only further our position on the global market, but also create new product opportunities that we're looking at right now. We're going to continue to invest in innovation. We're looking at the cloud. Some of our products run in the cloud today. Some do not. Probably the greatest advantage of being in the cloud is not for marketing purposes. It's the ability to spin up resources, spin up capacity quickly when the client, when the client capacity changes. And for some of our clients, that it can change very quickly. So we're putting a lot of time into looking at the cloud for future for those products that we don't have there now. Robotic process automation, again, we see that as a great way to further drive down costs around reconciliation, as well as natural language processing. So I mentioned we can identify a lot of trends in breaks between the back office and cost basis, and have a pretty good idea what's triggering those breaks. And so adding natural language processing makes it a lot easier to resolve them. We're going to be supporting more of the client lifecycle, and by that, getting kind of from the start of a client onboarding with the W-8s and W-9s. We don't do that today in Maxit. We don't do withholdings. We don't do withholding calculations. We do report on 1042, but we're going to be looking at moving closer to the start of the client lifecycle. And then data lifecycle management. For our beta clients that use both beta and Maxit, there's an opportunity here for us to own the entire data lifecycle all the way from back office through form generation. And then again, with the marriage with the Refinitiv and the future acquisition by LSEG, or pending acquisition by LSEG, we're really looking hard at global tax services. So starting with Canada, UK, EU, Australia. Cryptocurrency regulations are coming, I mentioned probably next year in the US, but they're probably coming everywhere, within the next couple of years throughout the world. And as we look globally, some of the tax reporting changes. Obviously, cost basis is a United States concept. So as we move globally, we'll start to offer transaction and stamp taxes as well. And that takes us to the end of the tax presentation. I think we have a couple questions on this. So I'm not sure I fully understand this question, but I'll give it a shot. The question is there any talk of 1099-B being sent electronically directly to the IRS in the future? Currently, the 1099-B is scanned and attached. So we do send the records that are on the 1099-B through IRS Fire. We have an automated feeder for that. I'm wondering if this question is really from the client perspective. So, for instance, in the UK, there's a big effort to digitize the entire tax process, and the whole thing will happen digitally. So the information coming from the broker, the returns coming from the investor back to HMRC, all of that will be digital. I think that's coming here too, as well. There's also there is some talk about the default right now is that firms need to provide or need to offer a print to investors. And some of the Wealth 2.0, some of the newer firms who are startups, essentially don't have any legacy clients. Out of the gate, they're really primarily offering digital. Now, legally, they have to offer print, but you have to opt in as opposed to opt out. There is a movement to allow digitization as the default. For a lot of things like statements and confirms. It has not yet talked about 1099-Bs, but I think that's coming. I think everybody would prefer that was possible to default to digital, and investors would have to opt into print. And that'll drive down costs. It'll speed up filing times. I think the IRS would prefer that. I think brokerages would prefer that, and ultimately investors would. Let's see. Yeah. So this is not a softball question. I didn't write this on myself, but given comparatively large advisory value add from Tax Alpha, when do clients start asking for integrated tax advice, technical lead trading solutions? What is precluding Refinitiv from providing that advice as an IRA, director overlay? Nothing. So that's what we're doing with the integration of our Max tax optimization with our various wealth products. That some of that will be automated, some of that will be sort of discretionary or manual. But advisors will have access to the full suite of tax optimization tools that we offer, or a subset. I mean, it's really, I mentioned we have APIs and widgets, so firms can deploy any portion of our offering that they choose. I think that's it for the questions. If anyone has a question was too shy to ask, please submit that after, and I'll be sure to get back to you. We've reached the end of this event. I want to thank everybody for participating. Again, a reminder: there is a survey. So if you would like additional information on any of our solutions, not just Beta and Max that you heard from about today, but the wealth products that you heard about yesterday, please fill out the survey, and we'll be sure to get back to you. In addition, we will be sending out the links to recordings of both yesterday and today, as well as the presentations that you saw on both days. So with that, I'd like to thank you all for attending.